All right, good morning, everyone, and welcome to the On Time on Target morning brief. Today is Thursday, August 27th. A lot in the news today that's going down, so let's get right to it. Before we do, if you're checking us out on replay, thank you so much for stopping by. You can go to steve@ototnow.com for a free trial. If you want to check us out, basically have a group of folks get together in the morning. We talk about long-term investing and short-term investing, and we try to find the best ways to make money in the market. Sometimes it takes a little bit of both. So thanks for checking us out and hope you stop on by. All right, for our mission objectives today, we're going to grow our money, protect our money, and live off our money. What we're doing there specific to today is in 10 minutes at 8:10 Central, 9:10 Eastern, Jerome Powell, the chairman of the Federal Reserve, is going to give a speech. Again, it's virtual this year, but normally this is the time of year for the Jackson Hole financial forum where all the biggest brains get together. Well, today is going to, they're going to do that virtually. And again, he's going to give a much anticipated speech on inflation targeting and talking about increasing inflation. And I don't think the market's going to dig that at all, but we shall see what they do here. So let's get on over to sharing this screen out to you so you can follow along. There we go. This is the tactical objectives I was just talking about, Jerome Powell and the Federal Reserve. For question of the day, why should I choose a 529 plan over a Coverdell ESA? Again, yesterday we talked about the Coverdell ESA. Today we'll talk about the 529 option and the differences, advantages, disadvantages, that sort of thing. For the flow, it'll be long, short, open, short, long. By that, I mean we're going to do the market review around the world. We're going to do headline review. And again, halfway through that, while we're talking about the headlines is when we should see the market start to price in what Chairman Powell is talking about. For long-term investments, all we're really going to show you is G-Bill, which is the Treasury fund out there. And again, this was about the only thing that went up during the sell-off in March, so we can see that. I don't anticipate that big of a sell-off again unless we have a flare-up in COVID, if you will. But the election sell-off again shouldn't be as significant if it ever happens. Again, I've been assuming we're going to have a sell-off, and it has not happened, making me look a little bit silly. But I don't think you can just continue to stay long and strong right through the election. We'll get into, within 10 minutes of the open, we'll switch our hats over to short-term day trading opportunities. There are several things in play. I have 5 that are gapping up, and it looks like 8 that are gapping down already that I found for us to take a look at. Again, we've been on kind of a roll this week. We've only taken things short and pretty much worked across the board. So hope to continue that trend today. Once we get done wrapping up our day trading stuff, 5 to 10 minutes after the market open, we'll transition back to long. I will go back to the chat and the Q&A and go ahead and answer any questions that you have out there, and then wrap up again with the question of the day. If you have any contingencies, please check in at steve@ototnow.com. My staff is standing by to answer your questions. And of course, the standard disclaimer applies that this is a financial education briefing, and you have to do your own due diligence before you act on anything you hear in the presentation. And if you're going to do some day trading stuff, we're going to talk in risk units. So again, that's how much you're willing to risk. If you're following this for the first time, this can move a little bit fast, but once you hear it a few times, you'll understand. The goal in our specific gap and go strategy is to find things that are either gapping up or down and take them in that direction. Meaning if it's gapping up, we'll go long. If it's gapping down, it'll go short. And then there's a whole bunch of math there depending on where we're going to set the stops as to how many shares you'll take. So you can only risk one risk unit. So you don't end up losing a whole bunch of money, not knowing what you're doing. So that's all here. There are other tools at ototnow.com for you to check out to kind of get on board with what we are doing in the mornings. All right, let's go over to Think Pipes from TD Ameritrade and take a look at where we've been as a market. So again, nice big up day yesterday that you can see right here, up to 357. Again, some new highs. Apple's been on fire. Obviously, it took a little bit of a breather yesterday, and I expect that to continue on to today. So that's where we've been. I won't show you the cues today, but let's zoom in a little bit on the last 5 days of the SPY. Again, this is the S&P 500. The dark blue is the open hours of trading, and then of course the light purple is after hours. So pretty much a straight move up yesterday. We did see that red right at the beginning. Again, that helped out our day trades. And if we really look at each day, we've had some red at least the past couple of days at the open. So that's been nice in that first, these are 15-minute candlesticks in that first 15 minutes. Some things are moving down, so that helps us with our day trades. But we shall see what's going to happen there. Again, initially we were gapping down and sort of gotten some strength going into the open here. As far as different earnings out there today, let's click on today's date. There are DLTR, Dollar General, DLTR, let's see, I have to check my notes. Missed, they're down 5%. Some earnings that are good was Box and Intap. We'll take a look at those long as well. And then WSM, Williams Sonoma, they missed as well. So off 5% there. So some things that are in play based off of earnings. I see Gap is up there. GPS, I have not seen. See if that's after the market. So that's after the market. So we will talk about that tomorrow. Okay, and then this is how we will be set up for our day trades, but we don't need to look at that right now. Let's go ahead and take a look at the CNBC.com. We'll refresh this to see where the futures are. All right, futures fall slightly ahead of the big Powell speech. We'll talk more about that. So things are barely in the red across the board. So take a look at Europe. Europe is mixed. So, and again, not really moving a whole lot. Everybody's really been curious today, even across the world, about what Chairman Powell is going to say. China's up a little bit. Let's see, Australia's up. Everything else is down across Asia. These are our numbers from yesterday, which is Wednesday. Big move up in the NASDAQ. Again, Apple took a little bit of a breather, which held and it needed to take a breather. It's been going straight up. Held back the Dow a little bit. And of course, the big shakeup in the Dow, right? With things like Salesforce in and ExxonMobil out. So a lot of things are changing in anticipation of, again, the big split that is going to go down on Monday in Apple. And of course, Tesla is splitting as well. Won't have as a direct effect as Apple will. When you look at the volatility, I like to look at this on a daily basis. It did move up slightly up to 23. Again, expecting a long VIX trade going into the election. As far as the bonds, getting closer and closer to that 0.7%, which again, it's kind of crazy that that is even what we're talking about, but that would be far more normal, especially if we can get that closer to 1%. And that's what you're going to hear Powell talking about today. I don't know if he can break down this very complex topic into something that your average person can understand, or if we're going to need to have it interpreted, on CNBC or that sort of thing, to see what he's actually saying. But it'll be an interesting speech for sure. All right. For oil, 43 above that, that's fine. Again, we have Laura hitting Hurricane Laura now, category 4, I believe, making landfall in Louisiana and parts of Texas today. So here we go. There's the landfall news. Over into precious metals, not a real big move across the board. They've kind of settled down. All right, let's look at the headlines. Okay, so this is the contentious part, is everybody's worried, and this is my interpretation. So you'll hear more about this on the mainstream media pretty much all morning. Even non-financial stations are going to be talking about this. So the concern is that inflation, what you and I and everybody else is concerned with, is that with all this money we're dumping into the economy as far as stimulus and things, is that that's going to cause runaway inflation, which we have not really had since the 80s. So when you look at the case for that, from 2007 to 2009, when we dumped a bunch of money into the economy, which we kind of dubbed quantitative easing, so QE 1 through 5, basically, when all of those took place, there was a lot of people talking about how much inflation this was going to cause. It didn't cause any inflation. Interest rates stayed low for a long time, almost a decade, and really only ran into trouble 9 years later in December of 2018 when the Fed actually tried to raise them a little bit, and it caused that almost 20% sell-off in 1 month. So the question here, or what Chairman Powell is going to talk about, is how can they manipulate interest rates and pull the levers that the Federal Reserve has to pull to be able to increase inflation. So they're going to try to increase inflation up to 2%. So there, he's probably speaking already. There he is. We're right at the 810, so you see the blurb up here. And to do that, keeping rates lower for longer. So, and I can already see on another screen, the market, of course, big red bar after he starts talking there. So we shall see that, keep rates lower for longer. Does that mean longer than they were coming out of 2009, which was 9 years? Really? So is this a, hey, be prepared for a decade or two of low rates? So if that is, that causes all kinds of problems for those that are in retirement and trying to get things that actually pay you money without taking the risk of the stock market. That just doesn't exist. So, and we'll get more into that when we talk about our real time. So that's going to be the headline of the day. While we're talking here, you might see some blurbs pop up across the top here. We did get the jobless benefits this morning. It was about 1 million, and that was kind of the expectation. So not a whole lot of moving the market there. Haven't heard about this Halo. Again, the Apple Watch, I think we're on Series 5 now. Again, the biggest benefit of that was being marketed was for the health aspect of it. It does have the fall detection to where it can alert, whoever you want to have alerted that you fell. It has some other monitoring systems. Really hasn't lived up to the hype, that's my opinion. But I think it's certainly tracking in the right direction. So it looks like Amazon's got something out to try to compete with that. And I will tell you, anytime anytime Amazon or Google tries to copy an Apple product, it fails. That's just, they generally can't touch it. All right. Again, last night for the Republican convention tonight. Let's see what else we have. About Laura, and people are having to actually leave their homes. This could be pretty bad. 2020 rocks on, right? So could be bad. We shall see. Hopefully it's not. TikTok CEO stepping down. Don't know if that's because of all the drama or if it was going to happen anyway. I wouldn't read a whole lot into that. Peloton's still moving up with their high-price subscription-based fitness stuff under the stay-at-home model. Yeah, this is falling out of the news, the whole stimulus bill and what's actually going to happen. Don't know, right? And maybe nothing happens because we get caught up in something else. Obviously, there were some emergency measures that Trump pulled, and overall, I think economically, those have been well received. So maybe we don't need another stimulus package if we can't agree going into the election. All right. Okay, about Jacob Blake and being shot in Wisconsin. And again, that was Sunday, really just now trickling into, as you can see at the bottom here, Wednesday's playoff games. Again, obviously, pretty much everything across the board for basketball, men's and women's, canceled. Some baseball stuff was affected. I think we'll see more of that on into Thursday and Friday. So again, last time we had the social unrest events, the market really didn't pay a whole lot of attention to it. It wasn't a big factor moving the market, I guess is what I should say. So stay tuned, right? Federal forces going into Wisconsin. So that gets everybody excited. We could see an increase in volatility based off of this. And again, I think it'll just be one of the themes this time around. It does affect some specific names. You tend to see like DraftKings is down 5% this morning, and it had been on an absolute tear. So I don't think that is a one-for-one relationship, but the market seems to think so. So we shall see. Flu shots are coming out. So again, there's some talk of don't get your flu shot now because that could make you more susceptible to COVID. So expect the Facebook experts to come out en masse on that, but who knows what the real story is. we shall see. We shall see. I will probably get my flu shot like I always have. All right. There's the Brewers now. Okay. Postponed game. I'm assuming that's tonight. Okay, that is it. Salesforce was the big move yesterday. It's right here. Obviously, Netflix moving up 12% is a good thing for we're in Netflix, but Salesforce moving up 26%. And again, new component of the Dow. They're laying off 1,000 people, which helps the bottom line. That's not good for the people who get laid off, but it does help the bottom line. So we shall see. All right, that is it for the headlines. Again, nothing here from Powell yet that's breaking across. Let's refresh real quick. Pretty much nothing's moved yet. If you want to watch it live on another screen, it would be down here. And if you have CNBC up the channel, you'll see the blurbs going across the bottom. Okay, let's talk about Powell real quick. So this is the gentleman that's talking. Again, I think he's done a fantastic job of running the Federal Reserve. Trump obviously he's very vocal to some of his, these folks are independent in the Federal Reserve, and obviously Trump has been vocal about how he should run things, and they've kind of gotten along, even though they're independent. So he's handled that well. He's done pretty much, they were in front of the COVID-19 thing by chopping rates. They might have actually spooked the markets a little bit, but as far as getting in front of it, they really did. So been really pretty thrilled personally for everything he's done. You can kind of see we started in law and then got into economics later on, held an amazing number of positions and worked his way up. So that's who he is. Now the Federal Reserve System, I kind of have the key takeaways brought up here. It's the Fed, it's the U.S. Central Bank. You can kind of think that they have two basic functions, and that's full employment and keeping inflation under control. That second part, keeping inflation under control, has always been keeping inflation down, not propping up the dollar. So we actually do inflate for that target of 2%. So we shall see. As far as the particular fund that we'll talk about today is G-Bill. I like to put money in this. It accrues daily and pays out monthly like a bank account. So you can put big chunks of money in there. It's like a high yield savings. When here's that drop monthly off to the left here, if you can see the mouse. So, and again, it pays out, and we're talking 10 cents it pays out, and there it paid out, basically 30 cents. So as it pays out, it drops down. However, it was about the only thing that was going up. And this is people are going to cash or they're moving to treasuries when the volatility increases. Since then, we've had a straight up market. It's kind of settled in. And again, doesn't move a whole lot, so it's a great place to park money. So let's move over and take a look at the same thing on the Schwab screen on the main layout page. So basically, this is where I have you see the dividends coming in monthly. So good place to park money. And there are longer term treasury plays out there, but this is by far the most favorable. So that's what we've got for the topic of the day. Let's go in and take a look at transitioning to the short-term sort of stuff. I did find a new tab here. I know this is going to be small on your screen, but this is where I'm getting some names for you, and I'll also put these in the chat. So long, we're going to take a look at Box in Tap, and again, I'm putting these in here so you can set up your trading stuff as well, based off of what you want to do. And so there's 5 longs that are going in there. So those are the 5 long names, and then short, several things apply. BILI, Williams Sonoma, DLTR, which is Dollar Tree, RAVN. They killed their dividend today, so they're selling off. Lee, which is a Chinese automaker, and then DraftKings, BKNG. So that's who we're looking at short. So that's who I'm going to talk about right now. Based off of this is a new screen you see off to the right here. And you can see at 8 o'clock, they come up with their gapping up or down. And then in the bottom, they add some color as to what those stories are. I already have those in my notes, so I'm going to go away from the screen. But if you're with Schwab, you can go up to news and then briefing.com, and it has that information in here. And obviously the latest one is the Fed speech. See, I did see a blurb pop up on another screen, and market's moving higher a little bit. May open in the green here. Apple, Amazon, DraftKings are all jumping up. So we shall see. All right, let's take a look at names specifically. Let's look at our long names first. So Box is an earnings beat. Again, jumping up 9% from 1929 up to 2120. Again, this is kind of new territory for it. Let's zoom out here. All right, previous high up in 2250. Gosh, that was end of June. So Box.com, Box is your cloud storage. I actually use Box. It's bank level security. It's a little bit expensive for me to pay on a monthly basis, but a lot of us use it that we need to. So again, no surprise there that they beat earnings. I don't know if that has a whole lot of upside to it, so we'll keep an eye on it. Again, I'm more of a short-term looking at shorts out here for today. All right, Intapp we're looking at next. This is NetApp. It's a tech firm. I will just leave it at that. From 42 up to 46, so gapping up around 8% or so based off of earnings. Went all the way up to 47.81, kind of settled in. Looking at some details here. So up 12% now, it's saying. Yep, I believe that. Not the specific numbers of why they're gapping up. That's a lot to sort through. I do not see it jumping off the page out there. But jumping up 11% now, which is kind of out of our zone. I don't really like it. Next name we'll look at is BMCH. This is merger news. Gapping up on the merger with BLDR. So this is BMC Stock Holdings. I do not know what they do. So buy BMC stock out, so they're getting bought in this merger. So 32 up to 39 is where it's gapping to. That's probably what they're getting bought at, is around $39 a share. Trying to see if I can tease this out of the headlines. All stock merger, so it's not necessarily a set price. So anyhow, it is gapping up. Looks like it went up to 44 or so, now settled back into 39. So we shall see. We'll keep an eye on it. All right, CLVS is Clovis Oncology. They had a breakthrough last night. Let's see, FDA approval for the liquid CDX, liquid biopsy for solid tumors, multiple companion diagnostic indications. So again, oncology, so this is cancer, so nice cancer breakthrough there. Smaller price points, again, you can use the 10-point stop or 10-cent stop in here, $4.96 up to $5.52. So if I want to say Clovis has been selling off, yeah, it's been up here at almost 8, sold down below 5. So it's got plenty of room to run to the upside. So if you were going to take a long, I would take that one, even though it's already up 16%. And then Abbott Labs has a COVID-related long breakthrough today. Let's see what this is. $5 rapid test. Think about $75 is the average cost or so. Record high. So up almost 103 to 112. Yeah, that's your standard 10%. Not so sure it's got a whole bunch of room to run. That's a couple month look. So it's been kind of stagnant here between 100 and 102, now breaking higher. So I don't think that has too much room to run. I think it's already pretty well done. Let's switch to shorts. BILI, Billy. Do not know what they do. Let's see, they beat on earnings and beat on revenue, so they got it above consensus. So why does the market not like it? I don't know. See if it's coming out of the, no, that was the next one that suspends dividends, Raven. So yeah, don't know why. It meets our numbers though for the volume and everything. So keep an eye on it. Doesn't make sense from a storyline though. We'll look at RAVN next because that's the one that suspended their dividend. So not much of a gap down, well, no volume here. So they suspended their dividend. So this is one of these, it will be my top short of they suspend their dividend. It's saying they're off 8%. So it must have had a tick down here to 21 or so. So that's where I would expect it to open, is down at 21. And then it does have room to fall from there. So expect us to take that with probably a 25-cent stop, because I think it'll sell off pretty hard. So that'll be my top one that I'm looking at for the short side. All right, 5 minutes to the open. A couple other names to go through. Williams-Sonoma missed earnings and is gapping down. Did get an upgrade though. We saw that yesterday, kind of a battleground with a stock. I don't remember what it was offhand, but 98 down to 92 with about half the volume we need. So we'll keep an eye on Williams-Sonoma. DLTR is Dollar Tree coming off of earnings. So plenty of volume from 104 down to 99. It's been kind of sky high, so this has a ton of room to fall, so I like that. Let's see, quarterly earnings beats profits, revenues in line, so it must have been the forward guidance that people aren't liking. So I like that as well. Heart of the envelope for gapping down. So I think I'll look at that short as well. Lee, the Chinese automaker, has been on fire. They said this is just profit taking this morning, 23 down to 21. So we'll check back on it. I don't see any storyline that's actually attached to it. And then DraftKings, again, just popped up on another, I have it on another screen. So we shall see 38 down to 37. So not much of a gap as it was earlier with sports, again, postponing. That is the storyline. So it's a headline sort of thing. All right, taking a look at some around the, there's our NTAP again that qualifies. Abbott, we've talked about. These are longs. Peloton, you could take Peloton. We'll put it in the notes. I wouldn't take it, but you could. Looking at the decliners, 3 minutes to the open. We'll get set up here shortly. Here's our volume. QDEL, I don't know what they do, and that's 23%, so too much. Netflix was up earlier. Now they're down a little bit. All right, let's see if anything else jumps out on us here. Abbott, we talked about. Box, we talked about. Jets ETF up 4%. Not enough for us to worry about. And then there's the NTAP, 10%. Clovis Oncology, 10%. Both of those, again, would work. GrowGen, we've been shorting that, so it's good to see them turn it around. And then there's the Peloton also. Any others names long? If you want to take it long. I don't want to take it long. So let's go ahead and switch over to setting up our screens on ThinkPipes. So what you're going to see here on left to right is there's the SPY. And you can see that's since Powell's been talking, it's moving up. I'm going to go to another screen and check the future, see if they're in the green. Yeah, we're in the green across the board. So that would lean towards you taking long names. I'm not going to do that, but you would not be wrong. RAVN has cut their dividend. They do not trade basically after market. So again, expect it to open down here and fall straight away. So that'll be our number one. Our number two, that'll be a 25-cent stop. Number two will be Williams-Sonoma. Watching that gap down, it is already gapping down 5%. So about, you're going to need a dollar stop. So $1 for Williams-Sonoma, maybe less, but probably a dollar. We'll need that volume to come in a little bit there before we hop on into that. And then the last one I'm going to put up is Dollar Tree. Nope, Williams-Sonoma back in there. And go to a 1 minute on each of these. and getting your tickers set up for a Raven. Again, that's going to pop in pretty quick when we have it. And the last one is DraftKings on a 1 minute. All right, so 30 seconds out from the start. This is welcome to the trade of the day. We have SPY over here. We have Ravens short, 25-cent stop. That'll be our primary at the open. Cut their dividend. Williams Sonoma, again, is secondary short with about $1, and then DraftKings for about 50 cents. We're going to watch that. I wouldn't get too excited about it. And with that, here is the opening bell. So again, watching Raven first. Market is opening up in the green after being in the red all morning. So we do need some volume to flow into RAVN here. So far, we are not getting it. DraftKings kind of battling back in its first minute there. We'll zoom in on that. I like to see that. I'll have it for the long term. Williams Sonoma is not really moving at all. Only 1,000 shares here so far, so I kind of like this as far as the setup. Are they stopped out? I'm going to another screen to see if they're actually stopped out. I don't know why they would be. No, not showing stopped out there. They started to move on the way down. So let's look at Williams Sonoma short. I'm gonna zoom out just a little bit. So we'll take it at 91.40. If it hits 91.40, we'll take it. Again, this is going to be $1 stop. Ooh, look at the move down in DraftKings there. Yikes. That's a pretty big sell-off again. 100,000 shares in that second minute. All right, a move up in Williams Sonoma. That's good for us. So we'll go to 91.50. So if it comes down to 91.50, we're going to enter it. So have your trade ready to go. If it doesn't go down there, then we aren't going to do it. We got a little bit of room, so I'm going off to another screen to see if Raven has stopped out and see what their average shares per day are. Again, we're looking at 91.50 for the entry. 5,000 in volume, the average 165,000 a day, so it does have the volume. So all right, a little bit of movement in it. All right, we're waiting for 91.50. I like this dojiing up here. Thinking about 92. Let's take it at 92 if it hits. And again, $1 stop for Williams Sonoma. Technically, it touched it there. I missed it, though, because I blinked at the wrong second, so it's about to hit it again. Plenty of volume. There it is. Let's take 92 right there. There's our entry point. I'm going to get the arrow put in to the south here. It's $1. So, again, it's put it up to 93 even. There's the arrow to tell you which way we're going. So 93 even is right here. That's again, our upper stop. So that would be that's the 1R we're losing. We're taking this short. So if it goes up and hits 93, we'll simply be out. We lose an R. That's no big deal. Our price points are basically every dollar. So it'd have to go down to 91 for 1R. And we're really looking for it to drop all the way down to 89. So we are in the Williams Sonoma trade. We're looking at the Raven trade here. DraftKings 37.36. Don't know what DraftKings is going to do today, so let's keep an eye on Raven. Ticked all the way down here. Boy, this is not selling off, and it sure seems like it should. Just not enough volume to be able to take a bunch of shares and get in and out of it, so we'll keep an eye on it. I don't think we're going to get this trade unless you take it later on, like in another maybe 5 minutes or so. So we shall see. There's our market. That's a 5 minute. Let's get to 1 minute. So we're talking the same page here for the overall market. Still holding in the green, but you're seeing a lot of red. Let's see. Yep, all we're getting out of blurbs for Chairman Powell is that its inflation announcement could keep rates lower longer. So, well, that's going to be nothing if that's all that we got out of that speech. All right, there we are at our 1 hour point. Oops, that wasn't a very good drawing for right at 91, but you know what I'm saying. So again, we took it here in the middle. There's our down arrow, and we're going to continue to watch this thing sell off. So I'm going to kill DraftKings. That's kind of a hot mess here all over the place. Let's look at some other shorts. We'll look at the shorts first. BILI. Again, this was on a missed earnings thesis. Ooh, that's nice. Tries to go higher, can't. Tries to go higher, can't. 46 already moved down almost $1. So, oh man, there it rolls over right there. So that's that delayed entry, the 5-minute entry. So that's working nice. Just saw another trade over here in RAVN. I want to hop in this short, but the volume's just killing me. So can't do it. Have to be disciplined. Doesn't meet our numbers, so can't do it. Let's see, Williams-Sonoma, we are in. Let's look at DLTR. Again, this is short. We're in the right-hand pane. So off of earnings, 99 up to, well, basically $1 move up and then short off of there. That's probably short covering. So you can see this right at 5%, selling off throughout the day. Lee, again, was just profit taking. I could see this turn around and powering higher. We'll see. That is not what I would call powering higher. So let's zoom in here. 22.30, over $1 move down. Almost 10% off. There's got to be a headline associated with some move of that level. So that would not have worked. And then let's take a look at, well, DraftKings we already looked at, so we don't need to look at that again. So let's look at some long names now. I just saw that move up. Let's look at Box. Beat earnings. So up 10% on the day would not have worked for a long. I don't care where you took this. Unless you took it on the way back up, you would just be in it now. I would not have liked that entry at all in Box, but good for them, up 10% on the day. Net NTAP is net app. Again, this looking at a long. That is selling off 46 down to 44. So over, it's $1.50 or so on that sell off. Still up 6%. So that would not have worked. Again, market, hanging out around about even. So, all right, let's take a look at BMCH. This is the one that had gapped up on merger news to around 39 is where it kind of gapped up to. So opened here at 38, hanging out in this range. So this is probably the price of 39 to 40. So it's up 22%. So nothing to really do there. CLVS, again, the Clovis Oncology on the tumor news. Not getting much love here at the open. Yeah, it's only $1. That's 20 cents from top to bottom, so it's not a whole big move down. I could see this turning around and moving back higher. Kind of shocked that it's not. Market selling off almost into the red there, so probably by the time I start looking at long names, I expect it's in the red. As far as our trade, we're in the green for half an hour or so. So again, if you're a $100 R, you're up $60. We have your P&L off to the right. If you're a $1,000 R, you're up, $700 or so right here. So we shall see. Let's take a look at the other name. 2 more names to look at long. Abbott. Again, on this $5 test, they're up 8% on the day. So nope, could not have traded them higher, not enough of a move. And last one, Peloton, I'd expect the same thing. It's already moved up so much that it's hard for it to move higher. So you would not have gotten an entry on it because you would have had to wait for it to not go all the way up and then bounce all the way up almost to here before you could take it long. So, all right. Williams-Sonoma, again, our next price target here is down at 90 even. That would be a 2R move. So we'll get that drawn in there. All right, so I'm going to leave the trade for right now. Market's basically even. So that's where we are as far as our Williams-Sonoma trade. We took it at 92. We put our stop in at 93, and every dollar is one risk unit on the way down. So closing that out, tried to take RAV in, just no volume. So not going to do it. Have to stay disciplined. All right, switching hats over to long names. Let's see what's up on the day. All right, that is an option for Kohl's. Abbott, you know about. Delta Airlines and Love Southwest are up on the day. That's interesting. Kohl's is moving higher. They've not gotten a lot of love recently. Tesla buck 80 or 1.85%. Are they at 2,200? Looking on another screen. Yep, exactly 2,200. That is so crazy. I have no further comment on Tesla's stock price other than the splits coming up. Starbucks, okay. ConocoPhillips on the move up. I saw that popping through here. So lots of names in the green for a flat market. I'm not sure that holds today. Let's look at the downside. Have some options up here for Salesforce, probably just selling off after yesterday's 26% move. NEO on the way down, that has been a complete rocket ship lately. LCA has also been on fire, so that's the Golden Nugget Online Gaming SPAC IPO coming out. DraftKings, remember this was down 5%, so it's actually doing better than it was at the open. Facebook's been on fire. Clickstream's in play. Baba, so for pretty even across the board, to be honest. So we shall see what the day. There are 2 airlines up 5%. That's kind of crazy. I'm looking at the headlines on another screen here. See if anything's popping up. All right, NASDAQ's in the red, Dow or the SPY's even, and Dow is up 0.5%. All right, let's look at the chat and the Q&A. Pretty quiet this morning. So last chance to kind of pop something in there if you want me to answer something. It doesn't have to be related to what we talked about this morning. And then I will, let's go back to our trade real quick, see how that's going. So down about an R, I would just let that cook, no worries there. And then Peloton, just take our other DLTR was the other short. Putting that in on the right side, that would not have worked either. Okay, and again, RAV in. So we'll just have those up while I'm talking here on another screen. I'm gonna start bringing up the 529 information. So yesterday we talked about covered L. Today we're going to talk about 529. So let me pause for a second and get ready to go. Today's question of the day is, why should I choose a 529 plan over a covered L ESA, which is the covered L Education Savings Account? That's what we talked about yesterday, and the advantages and disadvantages of it. So not too many people use the covered L. Far more people use the 529. So from a popularity standpoint, or if you want to put more than $2,000 in it, then you should probably open a 529. That's what I did for my children. And again, it was because when my oldest was born a little over 16 years ago, I wanted to start with $250 a month. So when you think about that over the course of a year, just of my contributions, that's going to be $3,000. So therefore, immediately I didn't want to use the covered L. I was already into the 529. So we will talk about the 529s and how they work. So first of all, they are state sponsored. So when you sign up for a 529 plan, you will sign up through the state. You do not have to sign up in the state that you actually live in. So originally I started mine in Ohio because that's the state I was from. Then I moved it to Utah after I found out that they had one of the better plans in the country. And now I have moved it to Texas now that I'm a full-time resident of Texas, and Texas is pretty good. And I should say, actually, my money's with TD Ameritrade, who uses one from Omaha, so Nebraska, as far as the TD Ameritrade 529. And you can also go through Schwab, which I can't remember where theirs is. But the big picture is it does not matter what state that is sponsoring the plan. All of the rules are the same for all the states. It's just what you see on your statements there. So if you're with TD Ameritrade, then all you're going to see is TD Ameritrade on your statement. So when you set these up, you are the account owner as the adult. So if you are married, you can pick one of the two of you is going to be the primary account owner. The other person would be the secondary account owner in case something happens to you, like the car accident scenario. And then it automatically transfers. But basically the money is in the hands of the adult. The beneficiary, the child is the beneficiary. So if you have more than one, if you have one child, well, that makes it easy because you pick an adult and then you have the child as the beneficiary, and then all the math becomes very easy. If, however, you have more than one child, then you can keep just the one 529 and then change the beneficiary if you need to. Or what most people do, because it's easier to keep straight in your mind, is open another 529. So you have the same adult being the name that's on there, and then a different beneficiary. Or in my case, I still have a chunk of money under my own name, so where I'm my own beneficiary because I have a piece of education that I need to finish up. So I'm holding back like $10,000 for that. So, and if I don't ever do that, or it doesn't cost the $10,000, it's simply I log in and I change that money over to a different beneficiary. So let's talk about how that works amongst your kids. So if you have 3 children and say the first one gets a scholarship, or if you're military, you have the Montgomery GI Bill, that sort of thing, you can simply go online and move those funds over to another child. So you can certainly transport them across everybody. If your child gets a scholarship or an appointment to a service academy, whatever the scholarship is for, even if they get a $500 scholarship, maybe from a sport they play or a club, they're in chess club in high school and they get a $500 scholarship. Well, you can at that point, one for one, take money back out of the 529 as the adult, and you are not penalized for doing so. But you can use that money, you basically take it out, you pay taxes on it as if you had never done it. So you don't want to be negatively affected if your kids, say you have 3 kids and they're all super smart or super athletic or some combination of the two, and they don't ever need the money's not locked away. So again, just like the Coverdell, you can use it for higher education expenses. There's a little more after the Tax Cut and Jobs Act of 2017. You can now use 529s for primary school, basically kindergarten through 12. If you're going through private school, you can use up to $10,000 a year per child out of the 529 plan to pay for those expenses. So that's what you can use it for. Again, if your kids get scholarships or choose not to, if they get scholarships, then you can actually withdraw money out of the 529 and use it for whatever you want as if you had never done it. If they don't go to college at all, and you need the money and you need to kind of break your contract, well, then you're going to face a 10% penalty to pull money out. So when you think of your hierarchy, and you pay taxes, so your kind of hierarchy of your dollars is you take care of yourself first as the adult, as the parent, because there are student loans, but there are no retirement loans. So you do need to take care of yourself first. And then as you max out your 401k, 403b, thrift savings plan, whatever your workplace employer, or SEP IRA, if you're an entrepreneur or small business owner like myself, you kind of max out your retirement stuff first, and then you put extra dollars into the 529 plan. Some folks want to take care of their children so bad that they don't prioritize this correctly. And if you put a bunch of money into 529s and then you short circuit your own retirement, you're not helping anybody out. You're not your kids either, because you're going to be their dependent later on in life if you don't take care of yourself. So make sure you're doing that first. Now let's talk about some unique circumstances of how much can I put into a 529. And I get this all the time when they're like, all right, Steve, that sounds good. I've got 2 kids. They're say 8 and 5. I know I didn't start at birth. So if you start at birth, I get this question all the time. How much do I put in if you start at birth? I'm like, well, put in something if you can. Otherwise, just pick $250. I can run the math for you and show you where that puts you, but it puts you over $100,000 by, normal returns, blah, 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 the standard financial planning assumptions. That puts you over $100,000. If you have 2 kids, you can start them both at 250. If you have a unique opportunity or you outperform in your investing, then you can stop at some point, which is what I did. I stopped after we had the big downturn in 2007 to 2009. I invested heavily through that, and then had another child during that period too in 2007. So I kind of stuck with my original plan, and then I got to the point where I stopped putting in because I had other priorities for money and there was enough in there. So, but if you're starting from scratch and you're starting a little bit late, you can basically go all the way up to the gift tax each year. So $15,000, per child into the account. So 2 children, say it's John and Jane, if you will. So you can put 15,000 each into there. So you can put 15,000 into John's and 15,000 into Jane's. Now, if you are married, each parent can put in 15,000, which again is the gift tax exclusion level, where you can gift stuff to your kids without it affecting your taxes or your estate later on, sort of thing. So really, you can start with 30,000 per child. You can also do what's called front loading or super funding your 529. And I'll talk about, you're probably doing other things here than just paying for their education. You're being very tax efficient. So who is this for? This is for, what I'm about to tell you is kind of an interesting way to save in taxes over a lifetime, because each of you, so you've maxed out all your retirement stuff, your health savings account, your flexible spending account, every available IRAs for both parents, you've maxed everything out you can, and now you're into a situation where, how can I avoid more taxes? Well, you can super fund, so you can put 5 years of money into the 529. So that is 15,000 times 5. So 75,000. And if you do that, you cannot donate money into that for the next 5 years. So you're basically able to pull those 5 years forward. So if you have your child again, John that's at 8 and Jane that's 5, and John's squawking about being a doctor or an anesthesiologist or something at that level, which maybe that doesn't happen when an 8-year-old starts talking about that. But you can go up to 75,000 per adult into that account. So when you think per adult, that would be, so you have 2 kids. So each of you can put 15K in each if you do 1 year. If you super fund them, you can each put 75K each per child. So again, that would be 150 for John and another 150K for Jane. So that's the maximum you can kind of start. Or if you have 4 kids, you could put in 150,000 each. That's before even talking about what grandparents can do or any other family members that choose to fund this. Those same rules apply to grandparents. So if grandparents have money that they want to hide from taxes and put towards education, you can go up to basically 75,000 per child if you haven't contributed before, and super fund it that way. So both grandparents living, 150K you can put in there. So why in the world would you do that? Well, what you're really doing is you are setting up what's called a Dynasty 529. So if you would super fund to these levels, you can continue putting in 15,000 a year until you get up to the maximums for the state. And again, I'm looking at a Investopedia screen that says the lowest maximum is in the state of Georgia, where you can go up to 235,000. And then once the account, again, per beneficiary per child hits 235,000, then you can't put any more in, but that money continues to grow. So you think rule of 72, you invest it aggressively, it doubles every 7 to 10 years. So you're talking quite a bit of money. So what happens in that case, and then California is saying the highest is 529,000. Well, 529 plan, that's easy to remember. But it's going to differ per state. But at some point, you can't put any more money in, but that money does continue to grow. So say you have $500,000 in John's, 529, and he goes off and he becomes a lawyer and he only uses 300,000 of it. Well, even if John doesn't have any children yet, he stays as the beneficiary. You can either, as the adult on it, can bring that money back and do some education stuff for yourself. You can take it to your parents. So basically anywhere in that direct family tree can use that money. And if everybody else is kind of educationed out, well, what you can do now is just let that money grow for the unborn children of both John and Jane. So that's what's called the Dynasty 529. So if you are a free healthcare for everybody sort of person, well, you can do this for your own family, to where all these unborn children and their unborn children are going to have access to almost free education. It's going to be difficult for them to exhaust all of that. So anyhow, that's what's called a Dynasty 529. How expensive is college is what I will close on. Pretty expensive, right? But when you really get down to it, and I've helped some clients go through this, I'm about to go through it myself, there is a lot of money out there through scholarships, FAFSA, again, there's the sticker, but nobody pays sticker is kind of the issue. And I do think the COVID-19 thing is going to affect what colleges are able to charge. So I don't know that they're going to continue to command all these prices. And for inflating schools, it was on average like 6-7% a year. That's kind of crazy. That means the cost of your education is doubling every 10 years. So I don't know what, you don't have a crystal ball. Obviously, we could elect some folks that put free education into place, and that would, convolute things, if you will, from a what are the rules perspective. But having a bunch of money set aside for free education is a pretty good place to use it. And again, it's tax-free all the way up to the point where you don't pay anything on it as long as you use it for education. And those rules tend to get more lenient over time. So that's all we have for today's show. Please reach out through ototnow.com with any questions or comments. Thanks again for joining me. And here's to you fighting the good fight every day to be on time, on target with your financial goals. Bye.